Everyone, my name is Stephen Stuart. I'm the CEO and chairman of QC Copper and Gold. I'm very pleased to be here to update you on our mineral resource update that we published on the Opemiska. Of course, the Opemiska was a former producing mine operated by Falconbridge for 50 years, where we've been busy reinterpreting that geology into an open pit mine. And we've put an exclamation point on that by publishing this resource with an open pit resource of over 2 billion pounds of copper, pit constrained, and it's now officially Canada's highest grade copper mine, open pit copper mine. We're well financed. We're not in a position where we need to raise money at this point in time. We've got $6 million in the bank. We still own almost 11 million shares of Baseload, which is our uranium company that we spun off a few years ago, and it's out there drilling in the coming months and days. And so for now in 2024, we're just updating the market because a lot has happened over the last 2 years as we've done this resource, and we're going to be very busy with growth drilling, but also further defining the engineering and economic challenges of building an open pit copper deposit right in the heart of Quebec.
As I was about to say, that's brave. Open pit. We'll get into the weeds in a second about how you go about doing that and some of the challenges that you'll be going through there. But again, hit us with those numbers on the mineral resource estimate. It's big. It's the highest grade you saw in Canada as well. So tell us about the what you've got.
So in terms of grade, in the in pit, we're just about almost a full % copper equivalent. And I know copper equivalent is controversial to some people, including your good friend Merlin, who we and you yourself. So look, we can talk about that. And I like copper equivalent because it makes it easy, but you also have to be very forthright with your inputs, your calculations, your pricing, etc. But in terms of everybody, when you say copper equivalent, everybody really wants the copper. And I'll point out that our copper is nearly 0.8% in an open pit. So when you put us up against any other deposit in Canada that is of a certain scale, of course, call it a multi-billion pounds copper deposit, we're heads and tails above them in terms of grade, oftentimes 2 or 3 times the grade. And that's only at the copper. Now you add the gold and you add the silver. Those are really nice byproducts to have. They're not, the metallurgy is there, and that's what everybody worries about when there's equivalence. But the metallurgy is there. One, we've got 40 years worth of mine level metallurgy that this mine produced a whole lot of copper and definitely gold and silver payable. In fact, 300,000 kilograms of silver was payable. So those are real, and those are recoverable. And we've done the updated metallurgy ourselves. We did a lot of it throughout this 2-year period to confirm that metallurgy behaves very similar. So the lower grade material, the mineralogy is very similar to the higher grade, and we expect the recoveries to be as good, potentially even better, as metallurgical processes have improved dramatically since the 70s and 80s.
Okay, I'm glad you went there because it was where I was going to go to next. Because if I remember correctly, when we first started talking about this, you've got I guess a penchant for picking up the difficult and the complicated, and this project was no different. What was the data that you inherited, and were you able to just take that at face value? Did you have to reinterpret it to be able to put this resource out? I mean, talk about the data analysis bit, if you don't mind.
Well, when we inherited this project, we acquired it in 2019, and when it came to us, it had a mountain of data, but it was all analog and it was in disparate places, and it was a huge undertaking to bring it all together, validate it, because even though it was done by Falconbridge, it needed to be validated and then digitize it. And then snap it all together with modern work, and then look at it in the context of an open pit, which is very different. So the underground drilling is very different approach than you would do if you're trying to develop an open pit. So when we acquired it, we spent a long time putting it all together. I'd say we did it on a shoestring because it was at a different time in the market. We were a smaller company. And then we came out with our first resource in 2021. It put us on the map. It got everybody's attention. They're like, holy moly. 100 million tons at 0.8% copper equivalent in the middle of Quebec on the rail, has hydroelectric power, cheap, low-cost hydroelectric power. It checks all the boxes in terms of infrastructure because of the legacy of the old mine. But then when we published that and we looked at the resource, which was done by a third-party consultant, which virtually every single 43101 is written by a third-party consultant, and some are good and some are great. And but what we did is we took a view that this is going to be a mine, Matt. That it has an excellent shot at going into production again. And so the view was, well, let's get this right now, because we saw some things that could be tightened up, some interpretations that we didn't necessarily agree with. So we got in there, we hired our own resource geologist, which is a very unique type of geologist. And he built a team around him where we literally tore down the database. And the database includes 900,000 meters of drilling from Falconbridge, 100,000 meters of drilling from us, and all sorts of geophysics, metallurgy, etc. And we married that together into a brand new database. I emphasize the database was meticulously crafted. And of course, from that data, you extract the interpretation of the geology. And as a result, when we delivered that, I think the biggest thing that was delivered was the increase in grade of the average grade in the open pit. And people ask why that is. Well, I would suggest that we tightened up our zones, right? So we're mining less waste per se, or we're defining less waste, and we're more precise in where the mineralized envelopes are.
Okay, so grade is good, and improving the grade is fantastic. I like that. And in your deck, you talk about this is the highest grade open pit in Canada. Okay. So I guess it's slightly qualified there. One, we're talking about open pit, not necessarily underground, and two, grade is one thing, scale's another. So again, remind us of the size of this thing now and what you're going to do to kind of make this attractive, because there's a lot of competition out there. There's a lot of people looking for copper projects, looking for scale at the end of the day. Can this thing be a multi-decade mine? As you say, you want it to be a mine. So how do you view that? How do you view your job in terms of presenting this?
We have round figures in pit. We've got a 100 million ton resource, which is a multi-decade type situation, and I assure you that if and when this goes into production, it's not just going to be the open pit. We've got the underground component, which you can see on our website, which we have just started to evaluate. We included a very small portion of the underground in this updated resource, but there's a lot more there. So expect us to focus on that. Additionally, we have the Cook and the Robitaille, which are the third and the fourth mine, which comprised Falconbridge's Opemiska. We've only focused on and included the Springer and the Perry, which is now one single pit. But in 2024, and in fact, we just announced recently that we're starting to drill on the Cook and Robitaille. We have not worked on them, and those were producing gold and copper mines that were, and they're not sort of far away. They're 1.5 to 2 kilometers away. So these are real satellite pits. Low-hanging fruit in terms of adding resources, because scale is important. And when producers are looking for projects, not only do they need scale, but they need grade. They're looking for grade, but they need scale to justify the capex. And beyond what we have, and beyond sort of the low-hanging fruit, the Chibougamau district, where we are located, and we are far and away the biggest asset there. Nothing comes close. This district is very mature, and it produced a very high percentage of the copper and gold out of Eastern Canada throughout the 20th century, billions and billions of pounds, millions of ounces of gold. So it's a very fertile district. It is our opinion that once we convince the world that a mill is going to reside at our Opemiska open pit, that the whole area re-rates. And so we do have a view for consolidation in this district, just like we always say, we're analogous to Malarctic, which obviously is a bold statement. We're not that big, but we're plenty big enough. And maybe one day we will be that big. But the idea is, they were an underground mine, turned it into an open pit, into a fertile area, and they are now mining resources or reserves that they had no idea existed when they opened that open pit back up. So that's the type of environment we're in, very fertile. It's never really been explored in terms of near surface material because there's a little bit of cover there, so you're not kicking outcrop. So, and frankly, I have kept the reins on our exploration team over the last 2 years because they've been laser focused on delivering this resource. So this whole area opens up, there's low-hanging fruit in the Cook and the Robitaille, delineating those resources, which we understand quite well, but need to be systematically drilled for an open pit definition. And then there's all sorts of blue sky. There's the underground on the existing pit. And then there's all sorts of other opportunities in the Chibougamau, given that, we do have a consolidative approach to QC Copper, and just our ore group as a group, we're very M&A oriented.
Well, I know that. No, sure. Is it Ore Group Capital now? What have you renamed it?
No, it's just Ore Group for clarity. Ore Group is our private company. We have 7 public companies under our umbrella now, and we just acquired another copper resource called Cuprum, which QC Copper owns 10% of it. That's the largest copper resource in Ontario. We bought it privately, again, out of a distressed situation. You say we don't like messy projects, but we like problems that other people have that we can take advantage of because we're well capitalized. We have a team that can assess these projects. We don't rely on what we're told. We rely on the data room and the database, and we see if these things stick together, and if we can buy them at the right time and the right price, and we see an opportunity for growth. We are buyers right now, not sellers.
Well, crikey, there's some deals out there. That's for sure. But let's stick with this project for now. Okay, so you've got a minimal resource out. You've kind of got a resource model which is you're starting to take shape. You're a $26-27 million company, and you've got to move this thing forward. Mm-hmm. Like in good markets, you'd have been talking to me about catalysts, left, right, and center, and this is going to change the way that people view us. In a market like this, you got to be, so I guess, sensitive to the fact that the market is finding its feet again. It's sensitive to the fact that money is generally hard to come by. I know you like to say, prove that wrong with your different companies, but it's expensive money at this time, right? So what do you think the things that investors looking to come into a copper story, which potentially the scale with this grade, need to understand about you and your ability to grow the story, tell a growth story from this point now?
Yeah, absolutely. Well, capital is absolutely essential. We always say, people, property, and capital. If you can't raise the money to fund those two, you've got nothing. And so you're right. We have access to capital. Money is shown to us all the time. It's just a function of its cost. We're very sensitive to the cost, and we're also equally as sensitive to how we deploy it. We're careful. We treat the money like it's our own. We act like owners. I think that's important to any investor looking to invest in a team like ours. Right now, we're in a good situation. We have $6 million mark to market. That's all hard dollars. And then, of course, we have that position in baseload energy, which, I'd love to be a long-term holder of baseload energy because I believe in James. And I think they've got $17 million to drill this year. So let's go out there and find some uranium deposits and hit it out of the park there. But also QC Copper is, we don't speculate on uranium junior, so expect us to sell that when the time is right. We will do, but for baseload shareholders, expect us to do it in an orderly fashion, just like we did 2 years ago when we sold 7 million shares for $8 million on QC Copper's account. We did so in a private transaction. We're not going to slam baseload. I'm the chairman of baseload, but that is a liquid asset. And expect us to utilize that for QC Copper's benefit. I'll note that QC Copper has already hit it out of the park on that investment. We spun off baseload at a cost of $500,000 in paper, which has turned into so far nearly mark to market 13, 14, maybe $15 million if we sold it today. So pretty good. That gives us flexibility. Doesn't if we had no cash, the market would just say, okay, well, it's just coming, and they would just sit there and wait, and they'd sell us off. But we have flexibility in timing. So our balance sheet protects us, allows us to wait for the right opportunity. The right opportunity, in my opinion, is a strategic. Someone coming in there with a 9.9% or a 19.9% interest. I'll remind our followers that over the past 2 or 3 years, we've raised $120 million in equity for our group. And we've done about $150 million in joint ventures with Agnico Eagle, with Teck, with Osisko, and with Newmont. So I think that is, and you really do want to take advantage of that money because it's patient capital. It's almost doesn't affect your float because they're not flipping you in 4 months plus a day. They're long-term. They also give you a stamp of approval. And so on that note, over the past 6 months, we've had huge inbounds on strategics, call it operators. Everybody sees them being more active, and there's no question that the highest grade copper open pit deposit in Canada gets their attention. And so they knock on our door, and what do? We go back and we sign CAs and we deliver what we've always been working on. What I said off the top, we deliver a high quality database that's designed for them, that is defensible. They'll understand it. It's so important to be credible to these guys because you cannot pull the wool over them. over their eyes. So they are looking right now. That is a process. So there's no guarantees on anything, certainly on timing. But I would wager that in the not too distant future, you're going to see big companies come into the Chibougamau district, where we are the biggest asset. We're the anchor of that whole region.
Okay. So those are all the kind of defensible attributes and some of the things that you've been doing. In simple terms, you've got $6 million in the bank. You've got to grow this thing. So how do you allocate that capital? Maybe that's a better way of framing it and maybe discussing it.
So allocation of capital for 2024 is really in twofold. One is the delineation or the definition of our engineering challenges, which will result in economics for that open pit. We are a brownfields environment, meaning we are mining an old mine. So we have stopes, drifts, etc. Those are extra challenges, nothing that hasn't been addressed many, many times. We're also proximate to the town of Chapais. Who are very supportive, but we've been very straightforward with the town and their leadership and all the stakeholders that our ambition is to build an open pit at the foot of your town, and so that has impacts. Clearly, we believe, and so does the town, that there are net positive benefits, but you can't get away from the fact that it'll be noisy. You'll have a big open pit there, and it's certainly possible that we will propose moving some houses. That has not been defined. That's going to be part of our engineering challenges. Once we define a mine plan, once we define the perimeter of the pit, we also have options to be not 100 million tons. For example, our starter pit is 20 million tons, just under 20 million tons, at 1.1% copper equivalent. That is further to the west, and that would be certainly not much less impactful, and almost certainly wouldn't move any towns. And so, we can evaluate different plans A, B, and C, and see what is the most practical and obviously the most economic and beneficial to the stakeholders, of which there are many in this project. So that is something that we're evaluating, so we can just really define that project. And I think, to me, that's a major catalyst, not just to deliver a PEA, but that's when you become real, is when you say, okay, this is how we're going to do it. So that is a priority.
Right. Putting some economics on it is a priority, and maybe in that same document discussing how you're proposing to do it, how you're thinking of doing it. It's early days, but there's also some long lead items there. Let's just say discussions with the town, or albeit supportive and pros and cons, I'm sure, that you're discussing. There's no set sort of deadline to that. So does any of that stop you from the in terms of the economic study phase, or any other kind of permitting component, or anything else that you're trying to do, environmental type stuff? Tell me more about the district, right? Because you've always talked about this as a big district, lots of potential, and lots of maybe stranded assets, old assets, etc. It's laden with potential. I get it. But at the same time, it's a very different environment the last 3 years, where jurisdictional risk is hot on the lips of most conversations at the moment. So what can you tell us? Well,
I can tell you that jurisdictional risk has been a major concern as of late, and we've seen that for years and years, and it is exactly why QC Copper, but not just QC, our entire portfolio is almost exclusively concentrated in Canada, because while we're not perfect here in Canada, we are definitely in my mind the absolute best jurisdiction in the world. But then Canada is a big place. And then so when you sort of get more granular, you have to see that Quebec is by far the best jurisdiction in Canada. We've got Plan Nord. We've got a pension fund support from the Caisse Depot Investissement Quebec, FTQC Dex, James Bay Fund, etc. So the government are literally our shareholders. They're mandated to support exploration in there. And then it's about the culture of the people. Northern Quebec is built off the extractive industries and forestry. So they understand it. You're not going there and trying to explain what mining is. They know what mining is. And then, of course, you've got the First Nations, which are our partners. Predominantly the Cree, certainly in where we are, became very sophisticated as a result of the hydroelectric dams, massive infrastructure projects built in the 70s. So which supported mining and supported all the infrastructure that's up there in Quebec. So they understand the benefits, and they are partners. They're suppliers and partners of all sorts. So And then in terms of just broadly speaking, jurisdiction, I mean, we look what's going on in Panama, we look what's going on in, South America as a whole, and Africa is always a big risk. You never know what tomorrow brings there. So the fact that we know we have title today, we know we have title tomorrow, we know we have title in 10 years is a massive benefit. And that's why we focus there. And then not only call it, political risk. Let's talk about where this concentrate's going to go. I mean, I'm a big believer in the United States. They're a little wacky right now. Everything seems a little wacky right now. But I think eventually we're going to normalize, and we normalize. It's going to be the United States who's going to wake up and realize we are two generations behind the East in terms of building out its infrastructure. And so they need to rebuild. And here we are, Quebec. We're just a stone's throw away from that border. We're stone's throw away from the Horn Smelter. Which is where we're going to send our con more than likely. And we're going to be supplying the United States. And that's not even considering the electrification narrative, of which everybody is talking about. And copper is certainly one of the key components to that. So this project checks all of the boxes in terms of jurisdiction, but also location. And then, last, I'll emphasize, we have the infrastructure. So not only do we have the right, a political climate, we've got the railroad roads literally right through our project. We got a spur to where the mine site used to be. We've got a paved highway, modern airport, hydroelectric power. For those, I have to remind, hydroelectric is totally renewable. That's the hydroelectric dam system that we have. And it's the lowest unit megawatt power there is certainly in North America. So, this project checks all of those boxes. We are big enough, and that tails back to, you don't have to be 2 billion pounds when you have all those infrastructure pieces there. So you don't have to build that stuff. And then you have grade. So plenty big enough. We have high grade, and we have all the benefits of those infrastructure that don't have to be built from scratch.
Yeah, no, big fan of Quebec. As a jurisdiction to operate in, and ease and support and all of those things you said. Can we just talk about how you were spending your time, money, and effort last year a little bit? We talked a long time ago about the QC Copper mine. You picked up a 10% interest in that. Something to do with the underground component? I mean, why 10%?
Because I have a vision to create the dominant copper developer in Eastern Canada. At the time, I didn't want to acquire it within QC Copper holistically. And at the time, because of the circumstance of the acquisition and the fact it was a distressed vendor, they didn't want to sell it to QC Copper. They wanted it into a new co because the vendor knew they were giving up a lot of value. Well, let's just leave it at that. And so they wanted to participate. And so they are a minority shareholder. And they're going to come for us, for the ride as we build value in the Thierry mine, which QC Copper owns. So they're the plan A for cuprum, which is copper. I'm sure you speak Latin, so I don't have to explain to you, but everybody sort of looks at me cross-eyed when we say cuprum, but it's copper corporation in Latin. And anyways, the plan A for that is to take it public, just like we do, done many times in the ore group, QC Copper, Basel, etc. However, there's certainly the potential for a plan B that would see, as I said, QC Copper become the owner of the two largest copper resources in Eastern Canada. That becomes interesting. Both, it's analogous, but former producing mine, huge open pit potential that has been delineated, but it's all open. So this cuprum company has a bright future. We just have to invest in it and step out and drill it. The con went to the Horn Smelter. It's on the rail. It's in a mature district. There's opportunity for consolidation. There's, it was a screaming buy for us, but we had to, we worked long and hard, and we're lucky to get it. But yeah, I was very pleased for QC Copper it only spent $300,000 to get that toehold. It's going to make money one way or the other, or potentially it owns both assets.
Okay. So if I look back, and again, I'm going share price here because I want to be really clear about what you're going to do coming up. End of 2020, big spike, down again. End of 21, big spike, and down again. Now, 2020, I can forgive because everyone was losing their tiny mines. 2021, market got a little bit excited, and you come off those dizzy heights of whatever you were, sort of 40 cents or so. Are we going to see another spike here, or are we now in a period of sustained growth? Because you're a bit late with the resource, right? So maybe mark down a little bit for that. you've delivered that. If you were trying to paint a picture for, I suspect, is going to be the key catalyst for you is bring a strategic investor on board. Can you be clear about the timing of that? Is presumably post PEA, or are there other things that you're going to need to deliver to be able to be in a position to bring a strategic on, which we need to also focus on?
No, I mean, the strategic doesn't care about a PEA. They don't care for a 43-101. What they care about is the resource and the database, right? So that, again, we built this database for the strategics who are in there right now, double digits of them. Okay. So, we are very attractive. We got a lot of inbounds, a lot of attention from publishing the highest grade copper. Everybody wants copper. Everybody wants to be in Canada. We're in Canada in the best jurisdiction. We have the highest grade open pit. Yeah, I mean, we haven't, the stock hasn't run, but the market's just not there. I mean, we've definitely appreciated, there's no question about that, when we first came out there. But I do think a major catalyst is going to be a strategic coming in. I don't make any predictions on timing or whether that happens, but certainly I can tell you there's interest, and certainly I can tell you, that is an objective of ours. But additionally, I mean, we can't bet or guarantee anything. But what I can promise you is that we will be doing drilling. And so we are going to grow on the Cook and the Robitaille. Again, all of the resources to date are solely on 2 out of the 4 mines, the Springer and the Perry, which is now a single super pit. About 1.5 kilometers to the east, there is the 3rd and the 4th mines that we have modeled. So we understand the historic work and the mining done by Falconbridge. And we know this mineralization. It's the exact same type of mineralization. We know how it behaves. We know its orientation. We just haven't drilled it. So expect us to do that in 2024. And then at some point thereafter, we don't know the timing yet, but obviously we're going to work as quick as we possibly can and responsibly. And then we will deliver updated resource based on those, the 3rd and the 4th mines, which will serve as satellite deposits. So we've got defining the mine plan on the open pit and growth on satellite deposits, which are not far. They're just down the street. So those are the primary catalysts. Those are the catalysts that we will deliver. In terms of a strategic, I have a hunch we'll deliver that too.
Okay, great. Look, any final kind of words or thoughts about what copper has been doing, what you think it's going to do? Obviously, you mentioned electrification, you mentioned infrastructure build-outs, etc., and the demand is absolutely there. Did copper surprise you at all last year? The fact that it didn't move?
No, nothing surprises me anymore. I expect the unexpected, really. So, I take a long-term directional view. I care not what happens next month or even next year or the year after that. We own this, Matt. We're not going anywhere. It's a long-term game. These are options, on future success. That's what it is. So you need to have patience, with us and with everybody. If you're not patient, invest in IBM or something. I don't know. Don't take investment advice from me, but this requires patience. But the returns that you can get, if you pick the right asset and the right group, and you are successful on timing, because timing is critical. If you can sort of get those 3 things together, the returns that our exploration industry can give to you are phenomenal. And frankly, you can't get them in too many other industries. So pick your projects well, pick your teams well, make sure that they do good work and they're not just lifestyles. Make sure that they're putting it into the ground, and make sure they're well aligned like we are, and they're not selling their shares, and also mind your jurisdiction, and then, place your bet and be patient and sit there and wait. And don't invest more than you can afford to lose. That's, because we are a high risk industry, so who knows what tomorrow brings. But time and time again, you can see 10 bay. I mean, you can see, I won't forecast the returns, but this industry offers just outstanding returns, provided you can be selective and patient.